That is the closing bell on Wall Street, and now it's market domination over time, getting you up to speed on the action from today's trade. We got Daniel Newman, the Turum CEO, is here, along with our data and markets editor. That would be Jared Blickery, to break down the moves today. Jared, let's start with you, my friend, on the close, and some fresh trade deal news, too.
Yes, we do. We have a fresh trade deal with Indonesia. Trump was mentioning this on Truth Social. Indonesia is going to cut their tariffs for the United States to 99% by 99%. U.S. is going to have 19% tariffs on Indonesian goods. You can see it there on your screen. In return, the Indonesian government and corporate entities are going to buy Boeing planes, agriculture, and energy goods and services. So we'll check out a few of those boards in a second. Let's get back to the main markets, where we have the Dow up 179 points to close, up 0.4%. Just looking at the intraday, we were at about this pace. We've added on some space to those gains that we saw a little bit earlier. In the NASDAQ, we were not able to climb into the green, still down about 0.4%. And then the S&P 500 managed to close in the green, but only by about 6 basis points there. Let's also check in on the small caps. They were leading today. S&P 600 is up over 1%. And just a quick check of the 30 years, since I've been checking that a lot lately, 4.90%. That's where it settled at 3 p.m. Eastern. That was down 3 basis points from yesterday and about 10 basis points off of Friday's close. So some definite improvements in lower rates on the long end of the curve. Also looking at the U.S. dollar index, that was down by about 0.5% today. And looking at the sector action, tech still the only sector in the red today, down almost 1%. And then healthcare took the lead. That defensive sector up almost 2%, followed by real estate, and then materials, utilities, and consumer discretionary. Also consumer staples, and that rounds out the top row there. Let's check in on the NASDAQ 100, where we do see some pressure on the mega caps. Nvidia down 2.5%, Broadcom down 3.33%. Yes, that is a mega cap. I'll count it in there. Meta down 1% as well, and Netflix down about 3.5%. But let's check out the Dow. I did mention that Indonesia is going to be buying some planes as part of that new trade deal that the U.S. just inked, and we're not really seeing that show up in the markets just yet. Here's an intraday of Boeing. The announcement time was somewhere in here. Really didn't see too much movement off of it. Nevertheless, I thought it'd be interesting to check out some of the sectors that might be impacted in the future. Here is the aerospace and defense heat map. You can see more red than green there, led to the downside by Lockheed Martin. We have a lot of earnings running through the market this week in that sector. Also, agriculture, very green today, not because of the trade deal, but just it's been this way all day. You can see Caterpillar up about 1.75%, Deere up almost 2%, and Archer Daniels up 2.33%. And finally, I did mention energy. That's another green sector today. Looking at gains of about 0.4% for ExxonMobil, Chevron about 0.25%, and ConocoPhillips up about 2%. And I'll send it back to you, Josh.
All right, thank you, Jared. Dan, I want to bring you back in here. So we're in wait and see mode now, right? We've got big tech earnings on deck, Dan. Given your expertise in the area, what would be the big themes, the big trends you're looking for?
Well, first of all, there's no better way to stop the party than to have Google come out with some bad numbers. I don't expect that, though. Tesla's already kind of told us what's going to happen. Their numbers don't look great, but the market doesn't trade their stock based on fundamentals anyway. So they're going to look past that. But Google, we got the breadcrumbs from TSMC last week, and the CapEx trade is safe. So the chip companies, the Nvidias, the AMD on their infrastructure side, I think those are going to continue to run. The consumption numbers are a little more opaque, meaning are these companies, Meta and Google, that are making these massive investments, Amazon, in AI, able to start to translate this to a number that can be shared? Because the market's been waiting, and I've been saying for 2 quarters now, the market wants to hear how AI is helping these companies make money. We put Meta very high in terms of their ability. Their investment in superintelligence is one thing, but the way they're able to translate AI into their ads business to drive revenue and keep that cash machine turning is very, very positive. But overall, I think the market has definitely bubbled up. I don't necessarily think tech has ended its run, but I do think that if the earnings don't show the encouraging continuing trend, not just in this CapEx spend, but also in AI's deployment and consumption by businesses, enterprises, and consumers, I do think that it could start to fizzle out what's been a pretty remarkable few months since Liberation Day.
Big move. We were talking chips earlier.
Yes.
Another vertical I want your take on, enterprise software specifically. What would you be looking for there?
Well, look, we have ServiceNow this week. We have IBM this week. IBM has seen its AI number, generative AI number, go to about 5 billion, but the lion's share of that is still consulting. So their Watson business, love to see more growth there. But that company has obviously, through its OpEx and its great management, I talk regularly to their CFO, Jim Kavanaugh, they've run that company well, driven the stock to all-time highs, continue to deliver. Can they hit that 5% growth target? ServiceNow, I actually will have a chance to talk to Bill McDermott tomorrow. That is the bellwether, I think, for AI. They have been one of the most exciting SaaS, rule of 40, 50 regularly. They've been talking a lot about the Now platform and AI. Can they start to really tell the market that their growth is directly attributable? Not just growth because they're doing the job and building their software and expanding their TAM, but because AI is taking customers away from other software platforms, and or they're expanding and bringing customers in that want to drive that productivity, the trillions of dollars of expected productivity in the market with next generation generative AI tools.
All right, we'll be watching and waiting. Thank you, Dan. For more on the markets now, let's bring in here Amy Kong, partner at Corient. That firm has more than $180 billion in assets under management. Amy, great to see you, especially on set. So listen, let's just talk generally about the markets. Big run off the April low. What do you see ahead, Amy? You know, you talk to clients, you say, listen, we just keep running higher, or you in that camp, you know, I've had different strategists on the show say, you know what, we've run pretty hard, Josh. They say, maybe it's time for a pullback, a correction, a breather.
Yeah, I absolutely think some of the comments you made, Dan, is super on point in the sense that we have seen this bubble up. This S&P is now trading north of 22 times. Even if you X out Mag 7, it's north of 20 times. So what am I saying to clients? I think this is a very good window to think about what cash flow needs there are for the remainder of the year. This is a good time to kind of plan for that. I think that this is probably a very comfortable lull before a couple of catalysts, if you would, hit the tape next week and in the coming weeks, whether it's FOMC next week. Certainly we are not expecting the Fed to cut, but the commentary from them in terms of what they plan to do between now and year end will be very important, especially with a lot of the pressure that we're seeing from President Trump and his cabinet. Obviously August 1st tariffs, a lot obviously will be pending on that as well. And we are in the midst of earnings season. I think right now the expectation is, again, coming from the Mag 7 to really carry the weight here, but once
how important, Amy, that how important is that big tech earnings results? How important is that going to be for the market?
I think it is going to have a very significant weight. When you think about the earnings expectation for the S&P going into 26, the expectation is probably around 12, maybe 13% earnings growth. And I would say the Mag 7 is probably a quarter of that. So I do think there's going to be a lot of weight on Google and Amazon in the coming weeks in terms of the Mag 7 reporting, in terms of how they see. And I think you put it really well, Dan, in terms of how do you use AI to monetize? Right now we have started to see that, but I think people are starting to wonder what is the next phase of that, and I think the commentary there will be key.
It is interesting, though. I mean, it does look like, if I'm watching how investors would play AI, if you were a chip investor, I look at the Nvidias, the Broadcoms. If I was looking at those stock moves, I would think, okay, that AI trade and theme looks intact.
Yeah, I would stay the course. We see $1 trillion in AI chip spend by the end of the decade. It's kind of easy to break down how that's going to happen. We think about 25% of it will be custom, which that's going to largely go to Broadcom. The rest will go to Marvell. We think about 90% of that bigger pie, which is almost 800 billion, Josh, is going to be mostly available to Nvidia, and AMD will take what's left. Intel obviously has we almost don't even talk about them anymore. I'd like to see them come back into the race. We could use them in the foundry side. And then of course on the chip side, Josh, TSMC, what a juggernaut. There is no competition there right now. They control the pricing. They have it's completely inelastic. And if I'm an investor and I really want to play the chip trade over time, Nvidia, TSMC, Broadcom, love them all. AMD is probably the wild card, but has some real upside because someone has to be the number 2 in that GPU space.
Amy, as you look ahead now, if you were to, on your wall of worry, if you could kind of lay out the risks, Amy, would it be valuation, sentiment, positioning? What would be on it?
Yeah, I think there are a lot of things that can probably fill in the blank there. Certainly, the market has gotten used to the tariff language, so maybe the sting is not as, as much this time around.
The market shrugs, Amy.
It really does, yeah. No, absolutely, and it's a little scary.
Is that complacent, in your opinion?
Absolutely, I think there is a very high level of complacency here. And when we look back to April, I think investors needed to readjust to President Trump's communication style from the first term. It's changed, obviously, and now they've gotten used to it. And they do think that there's probably likelihood of some, walk back in terms of the initial comments. And so maybe there's not as much of a sting as I've mentioned. I do worry a little bit about valuations at this level. We are trading now at, over one standard deviation above the 30-year average when it comes to the S&P 500. And ultimately, we certainly have monetary risk error still looming out there. I think the commentary from the Fed next week will be very key in terms of what they plan to do going into the next 12 months.
The expectation is nothing surprising next week, no big moves.
Very, very low.
Is your base case still a cut later this year?
Yeah, I think two, maybe three at most, depending on market data, but probably two as a base case would be the norm here. Certainly, I think the president expects more, and so I think the president expects more. The president, he has expectations for sure, and he's where
made that clear.
Fed tries to meet that is important as well. So I think that's going to be.
Do you think, Amy, does the market require a cut to move higher?
No, I think earnings have been strong, and I don't think that goes away. I think the resiliency of the economy, all of that is checking positive, and certainly the Fed, if it does cut, that will be the Fed put, as they call it. It'll be a supporting factor. I'm not necessarily sure it's a great necessity at this very moment, again because of the resiliency of the economy. Now, ask me again in 6 months if we start to moderate some more. Maybe the answer becomes, maybe we do need the Fed.
I'll end here, Amy. There was this one I want to ping this off you because we talk a lot about the tariffs, and there is this concern, totally justified, about what it's going to mean for margins and what it's going to mean for fundamentals and how CEOs are navigating. And we heard from RTX today, and I thought the CEO's comment on the call was interesting. Talking tariffs, Amy, he said, on the trade front, and it continues to be fluid, but our outlook on the impact of tariffs has improved for the year, as there have been some positive announcement. He goes on to say, we also continue to improve our ability to mitigate tariff headlines. I'm just wondering, what odds would you give it that actually companies, for all this talk about tariffs, and again, I'm not minimizing it, the risk there, but maybe they actually figure out that CEOs and CFOs get together and they actually figure out how to maybe effectively navigate this dynamic more effectively than we assume.
Yeah, I think part of it is operationally at each company. They figure things out to optimize that situation. But don't forget, you've got other macro factors that could be supportive, right? We've just gotten this big tax bill passed where it could help in terms of consumption patterns, you name it. The US dollar, we haven't talked about that in this session, has been weaker. And that certainly can be helpful when you think about companies that have non-US revenue, and you think about the S&P 500, that's probably a third of their revenue base comes from non-US counterparts. That will be helpful with the weaker US dollar.
Amy, always great to see you, especially on set. Thank you.
Thanks, Josh.
Earnings season heating up, and we're on the heels of a couple magnificent 7 names. Alphabet and Tesla reporting second quarter earnings on Wednesday. But how does each name rank going into the second half? Joining me now is Brian Mulberry, Senior Client Portfolio Manager at Zacks Investment Management. Brian, it is great to see you, especially on set. So let's start here. When you power rank the Mag 7, my friend, how do you power rank? What are the variables, the metrics? What are you screening for?
This falls right in line with the conversation you've been having all afternoon. It's about the monetization of AI. That's certainly the next wave of where revenue growth is going to come from. And we look at it through a lens of 2 different metrics: short term in the next couple of quarters versus the next couple of years. Who is actually capitalizing on this AI monetization program? So that's what we're looking at and looking for. It leads to earnings growth, which we all want to see, but also earnings durability over that long period of time.
So perhaps let's get into some of these. Perhaps not surprising. Number 1, Nvidia, Jensen Huang, powerhouse. Walk us through it.
When you just look at what the asset flow of AI is going to look like, it's going to start with hardware makers like Nvidia. They have the most functioning hardware that is in the most demand at this point in time, and that leads to the highest level of earnings growth and earnings durability. So you're talking about the next 2 to 3 years of earnings growth at 28% or plus. That certainly leads the pack for us.
Dan, I want to bring you in here. It wasn't so long ago. There were some questions about Nvidia. There were some skeptics. They were coming on my show, Dan. They were saying, you know what, 2025, maybe this is peak AI CapEx spend.
Yeah, I can't believe how many people were so wrong in so many different ways. The DeepSeek moment, didn't do the research, didn't realize how much Nvidia, billions of Nvidia was actually sitting behind that. It wasn't $7 million training these models. They thought the China risk was bigger when that export control went into place. But the demand in the global market, whether it's been Middle East, whether it's been here in the US, you hear Sam Altman and Elon Musk, they may not get along, but they will both acknowledge that their GPUs are melting because they literally can't get their hands on enough hardware. So the demand is so large, the margins are so high, and the diversification risk, meaning going to an AMD, is still too hard. You're seeing little bits. The inference era will pivot this just a little bit. But overall, they still control the market. They control the margins. And everyone that uses NVIDIA is at Jensen's door asking him for more. They're not selling. They're literally delivering.
Number two, we got the goal with Nvidia. Number two, who takes the silver? That would be Satya Nadella, Microsoft. How come, Brian?
We like Microsoft simply because they've built out the next level of sales. The Azure and the cloud business also showing that mid 20% earnings and revenue growth at this point in time. So that's the link between the hardware and the compute and what's actually going to look like in an enterprise software environment. Big cloud, market share there, and they've monetized that through Azure and done a really good job at connecting the actual computing power to consumers.
You share that bullishness on all things Microsoft?
I've been a Microsoft bull for a long time. I
know
will say
it.
they're a little lower on my list right now.
Why? How come? Lower?
I want them to build their own infrastructure. You're seeing delays in their Maya chip. They're having some problems building that stack. I'm okay with their external workloads, the ones that customers in their Azure cloud are using being all NVIDIA. But for a lot of their own workloads, I'd like to see them have that vertical integration and have a little more control over their destiny. I'm also a little concerned about the research and lack of LLM development on their own, very connected to OpenAI. It was the best bet in the beginning. It absolutely accelerated, catapulted them to the top. But now you've seen Google catch up. Of course, Google's been at it a while, but Amazon has made big moves there. Tesla, of course, not direct competition, but making big moves in AI. Microsoft's doing better than Apple, but I would like to see more in terms of their own in-house AI development for their longevity. So you said a couple quarters, Microsoft is great.
Yeah.
Over a few years, I'd like to just see more in-house. I think Satya's got this. It's just, I'd like to hear more about it externally.
So, Brian, Dan's throwing some yellow flags there.
The hedge on it is simply the early investment in OpenAI. They get to monetize that if anything goes sideways. So that would be, I would think, the parachute that Microsoft has that the other ones don't.
Number three, it would be Apple. Now, Apple, we know, has been under some pressure this year. Maybe there's some disappointment about its position in AI, the efforts there. What do you see?
It's really just the strength of their brand. The second they figure some of this out, they connect to almost 1 billion users with a vertical integrated stack of hardware that immediately gets impacted and upgraded. So their ability to simply execute on that level, I think, is really strong, and that's why we have it this high on the list.
What do you think, Dan?
I can't figure out how they can't execute, but they haven't been able to execute. They've missed on metaverse, they've missed on cars. Right now, they're missing on AI. I say go buy Perplexity. It doesn't fix all your problems, but it shows some intent.
But that would be, Dan, a big shift in Cupertino. I mean, the biggest deal they've ever done was Beats for $3 billion. I think Perplexity is valued at something like $14 billion.
Oh yeah, it would be a big deal. But right now, the entire market is looking at Apple with the side eye, going, how are you getting this wrong? How are your top researchers leave? Nobody in a position like that would have left Apple 2 years ago. Right now, they're leaving to go work for Meta. Meta was the company that, why would anyone ever leave Apple for? They're the also-rans in hardware. They're the ads company. Apple needs to show some intent. Tim Cook needs to step up. Their COO leaving creates some risk, but their 2.2 plus billion installed handsets in the market gives them some time. I give them leeway. But the Blockbusters and the Blackberries, all those companies thought they were impenetrable and undisruptible, and at some point it broke. I would hate to see that for Apple, not suggesting we're there, but they do need to do something.
I was talking, Brian, with another longtime Apple analyst, Gene Munster, and Munster's point to me was it comes down to their install base for him. Yeah. Billions of fans all over the world. His point being they are loyal, they're locked in. The third-party research would indicate they're satisfied. His point was he believes that gives them a runway here. They've got time to figure it out. Do you agree?
Yeah, and that time for us is probably a couple of quarters to make the impact that Dan is talking about. That's why we're willing to have them here on our list. You have $130 billion in liquidity on the balance sheet. If they need to make a splash, they certainly can, or they might just be figuring something out internally that we just don't know about. On the fringe of all of this, you have quantum computing that might be a different solve for Apple, and given what they've been able to engineer in the past, you couldn't leave that off the table. But they have the money to finance it if they want to.
Is part of your call, Brian, on Apple, does it have anything to do with valuation? I mean, the concerns we're talking about, at this point, pretty well known. That stock has been under pressure this year, down, what, about 15%?
Yeah, I really do think it's a buy at this point in time, especially relative to some of the other places that you could find value in this market. This is still a very durable earning type of a stock that just happens to be under pressure in the moment.
What about Amazon?
We like Amazon as well. We've got this middle of the table at fourth out of the seventh. You know, everything we've been talking about. They've got size, they've got scale. You've got, you know, a pretty healthy U.S. consumer, so retail sales have been pretty good. Offset some of the pressure on tariffs with a little bit weaker dollar, and they've been able to do everything we've talked about in AI as well.
What about Amazon, Dan?
I think you hit it. I mean, I love the robotics, the deflationary aspects of all the AI in their business. Commerce has never been a revenue profit generator for them. They've been very dependent on the cloud business. The cloud business continues to grow. It does have law of large numbers. So when you see Oracle growing 50% and Google and Microsoft growing high 20s, they've been in the teens, but they're also 2-3 times bigger than some of those in terms of cloud. So I like the business. They do need to make a bigger AI pivot. They've made some big commitments, some new generative AI tools, some new agentic platforms. So I like what they're doing overall, and I think I would put them right in the middle too.
Within that cloud war, as Amazon goes head to head with the other hyperscalers, with the Googles, right, with the Microsofts, Larry Ellison's in the game, what would you say AWS's competitive advantages would be there?
It's the massive global deployment. They have the regions, the zones, they have the hardware infrastructure, the customers bought in, enterprises. So much technical debt. We've talked about this. Actually getting their data estate ready to use in AI is really, really hard. Picking all that stuff up and moving it is even harder. And that's why the enterprise AI deployment has moved so much slower than the consumer AI deployment. So we think that if they can be sticky and they can continue to upgrade and give customers what they need AI-wise in their cloud, I don't think customers are going to run. Now they need to have enough Nvidia. That's been a challenge for Amazon. And they need to make sure that their capabilities are there, because the AI era, it is a 100% inflection from that first generation cloud CPU era. So the ordering of who's the best cloud is getting restated in this AI paradigm. And so Amazon's been number one for the longest time. The risk is not being seen as the number one AI cloud.
Let's move on. Meta.
Yeah, so if we're in this AI conversation talking about Amazon and Microsoft really gearing up towards the enterprise market, Meta is going after the retail market in a really big way. Obviously, you've got Instagram, WhatsApp, and those users that are out there. So they're looking for the individual customers and monetizing AI in that way, opposite of what Amazon and Microsoft are doing. So there's a huge market there for them. You know, Zuck is certainly not afraid to spend money. He's doing it. He's investing in growth and development, but he's got kind of a hump he has to get over. He's got that metaverse that's still kind of lagging around on him that he spent a lot of money on and never really monetized it. So there's a little bit of a bug, and that's why he's lower on our list right now, is to see the execution.
And Zuck poaching AI talent, top talent from those rivals in Silicon Valley.
Yeah, I absolutely love Meta. I think they're the best in the group in terms of monetizing AI. So I put them up much higher because they're actually making money in their ads business using all this AI. The bets he's making, you know, I'm a big soccer fan, Josh, so it's like the Premier League. You know, you want to sign Ronaldo, you want to sign Messi, you bring the best talent. He basically sees a multi-trillion-dollar market cap opportunity in spending a few $1 billion to bring the talent. The OpenAI developers that help build, the researchers that help build some O3, and some top talent from Apple. They just brought the top talent in from there. He basically sees that as a better bet. I agree with you on the metaverse. I think they've missed. Metaverse wins when physical AI becomes a thing. There were years in advance, and sometimes they say, I wasn't wrong, I was early, and in this business, it's the same thing. Being early is wrong, they spent too many billions, but they will be first to get there when that metaverse moment comes.
All right, Brian and Dan, great conversation. We covered a lot of names. Appreciate it, guys.
Absolutely.